Well, good afternoon, and thank you for joining me today. I'm Sarah Perkins with Lawyers Title. I'm here to talk about what's going on this week in real estate, or what's been happening this week in real estate. And, you know, there's a lot of news and a lot of things that we talk about. And of course, there's just so much happening. So anytime you have any specific interest that you would like me to cover, please let me know. I will do a deep research and dive right in. So appreciate any feedback or any suggestions that you have. Right now, and I know you guys, I hope you're not tired of hearing about it, but forbearance is still a big issue. And the reason I keep talking about it is that it's really up to us to tell everybody about what's going on with the different forbearance programs, and that there are options. That's the bottom line, is people have options. And that's where we don't want to let fear or any lack of information kind of put us in a bad situation because people didn't know about their options. So, you know, I've told the story of one of my clients. There was a colleague that she had, and they got their, you know, typical forbearance last 3 to 6 months. They got a letter that said, hey, you know, your forbearance period's over. You owe us $8,000. They got scared, sold their house to Open Door, where, you know, had they wanted to stay in the house, had they wanted to do things, you know, that could have allowed them to not have to move and go through that, and maybe even be able to maximize their situation, especially with all the added equity that we've had this year, we would certainly love to, you know, we want to make sure that they avoid those complications in the future, because we don't want people to run into bad situations. So a couple of things when we know about forbearance has evolved over the last, say, 6 months, even from when it started. It used to be that if you called your lender and said, hey, what is forbearance? That meant you were put on a forbearance program. It is not the case today. You do have to say, hey, this is, you know, a forbearance program, or I want in, or I don't, I want information. So there's a lot of things that you can do to have those conversations with the lender, with the servicer. So it's definitely good to always have conversations about, you know, when you're asking questions, is whether or not you're in a forbearance program. Couple of things is we really have gone down in the number of forbearance of properties in forbearance. It was initially anticipated it could be upwards 20-30% of loans would be in forbearance. We're now below 7. It's at 6.81%, or roughly 3.4 million loans are in, or mortgages are in forbearance. The one thing to consider, though, is there are quite a few homeowners that are not in forbearance who, because they don't know about it, they're afraid of it, things like that. So that would be a beneficial program for them. Now, keep in mind that a lot of these, you know, the forbearance programs, they do have to be paid back later. There are just options in order to get paid back, or how they get the payback or the payment made up. Couple things too is when you're looking at forbearance. Now, one thing, yes, I do talk about it a lot, but no, I don't think that we're going to be up against like a big foreclosure rush or anything like that. We may have some foreclosure trickles, but not a ton of them, just given a couple, like so many reasons why, you know, it's not the same situations we were in 10 years ago. But one of them is 9% of loans of properties that are in forbearance have less than 10% equity. So it's a very small group that would be in that negative, potentially in that negative equity situation. But we just don't know where that's gonna, you know, things are gonna fall out when people have the, like when they have the penalties and all that come in, because we just don't know what that's gonna look like yet. We do know that one thing that's kind of interesting is, although forbearance properties that are, or loans that are in forbearance are not negatively affecting the borrower's credit if they're not making their payments, they're still being tracked as delinquent. So when you see these delinquency rates or delinquency numbers, that does take into consideration the forbearance numbers. We just don't know kind of the full story because it is not all public record. There are some data sources that do have some useful things within it, but it's one of those, you got to kind of just keep watching it and seeing what, you know, for the whole story. A couple of things when you're looking at delinquency rates, the national non-current rate, and that is a combination of loans that are, or mortgages that are delinquent and in foreclosure, is 7.2%. In Arizona, it's 5.7%. So, yeah, flip the numbers. But we're actually ahead of most of the country. We're in about the 12th best position in the country. Statewide, the #1 state is where's my notes? Idaho is at 3.8% and Mississippi's at the bottom, unfortunately, at 11.7%. We do know that some of the 30-day delinquencies have started to drop. So that is looking at more of the properties or loans that are in forbearance or ones that have been in for an extended period of time. About 70% of mortgages in forbearance are currently on extensions. Some good stuff. I do want to just share this one chart because I like it. And let me pull it up. And this is showing payments being made. And what I like about this is, you know, when you see I have to hit share. When you see right here, we actually had an increase in payments and housing payments in September from August, and then even from August to July. So these are good trends going upwards, you know, that hopefully will have us with, I guess, you know, fewer loans in delinquency, fewer loans, you know, kind of going down that path, because we want to keep everybody in their houses as long as possible. And that's really the bottom line. We want to have people who, you know, the best thing for housing is having occupied houses. So we want to keep people in their houses. That's one of the things that's very, very different than where we were 10 years ago. There are a few kind of options that I do, you know, happy to share with you, happy to share written out so you can have those to talk to your customers about. But there are ways that you can stay in the home and also get out of your forbearance, you know, program. So there's some of them, like when people get those payment or those bills for however many months of, you know, what was kind of put at the end of the mortgage, or things that they, you know, they're not just put at the end of the mortgage. I guess what I'm trying to say is when they get a bill, it says, hey, you owe $8,000. What do people have? What are some resources that are available? One thing to consider is, remember, Phoenix is at a 17% appreciation over the last 12 months. So a lot of people have a lot more equity to play with. Maybe they can renegotiate some of their existing loans, do a permanent loan modification, do a refinance if they need to. There's also ways that you can utilize a 401k. There's two options within a 401k. Either way, you still have to talk to your 401k administrator for details, but if you do have a 401k that you can utilize, you can do one where you actually take a lump sum out, but you pay yourself back with interest. And when you pay yourself back with interest, what that does is that prevents you from being fined or having any penalties, because you're still putting all that money back in. Also, through the CARES Act, there was a provision in there that does allow people to do one lump sum kind of withdrawal from their 401k without any penalties. So that can kind of help people, you know, just cover some of those extra costs, do things so they can stay in their house. Some people are even doing, because if they have another place to live, if they can move in with family or have another property that they own, they can rent out that property. Now, you know, rent rates have gone up just as quickly as purchase prices have. So, you know, people might be able to cover their costs, and maybe then some, by renting out the property. And then if you can't, maybe you can sell and buy and then get into something that might be a little more affordable or manageable with the payments, or then sell and rent or find another option. Those are kind of the lower options, because it doesn't allow people to stay in their houses. But you know, there's things to just consider out there. I'm going to post some links of resources. There's some national programs and local Arizona programs that are available. You know, it's really just helpful to have things put together, and that allow people to know that they have options. Just keep having those conversations with everyone. You know, as we're talking about forbearance, why are we talking about forbearance? A lot of it is because of the unemployment situation, which we all know due to the pandemic. But you think about where we are and what we've made up. We've made up over 50% of the jobs that were lost, which is so good to have it happen so fast. You look at any of the other past recessions or anything, it's taken months and years to make up jobs lost. You know, in the 10 years between the Great Recession and before COVID hit, it took all that time just to make up all the jobs that were lost during the Great Recession. And here we are, we've already made up 50%, and it's still, you know, we're about almost 7 months in. This has been a very chaotic year, but we are making up. And just, you know, I can show you another quick screen share on that one, because I do think it's pretty powerful. But you look at it kind of shows all the jobs that were lost, you know, kind of what we went through, and then every month of these job gains. You know, a lot of economists are talking about the reason that some of these job gains are slowing is because there hasn't been, you know, another extension on the CARES Act or anything like that. And I'm not trying to be political. I'm just saying this is what is being talked about. Some people are saying, I know that there's been some flip-flopping on whether or not there's going to be an extension or another CARES Act that comes out. We don't know, but I know a lot of economists are feeling a little unsure about the unemployment situation if there is not additional support that's put out there for the remaining, you know, for the ones that are still unemployed. And we've got to look at it's very sector specific, and then we go into kind of like, you know, how it's affected on, you know, the commercial side and all that stuff. But we're definitely watching it because it all connects together, and they all, you know, it's been wonderful having real estate as that like lifeline for the entire economy, and we want to do the best we can do. And you know, prices going up, supply and demand, we know all about that. It's still tight, you know, demand continues to increase. We actually have had some increase in inventory, which is great for the buyers. It gives them a little more wiggle room, and you know, quite frankly, 17% appreciation is great for homeowners and sellers, but it's not that great for our buyers. So we want to have things that do allow our buyers to come in and have the opportunity and ability to get their offers accepted, because that is such a challenge. If we don't have people coming into the market, we're not having the move up buyers, and it keeps the whole machine working. And if we're saving the whole economy, we got to keep being able to have our systems work, you know? And so having more inventory, having these conversations with people about what's going on in the marketplace, you know, helping to pull back some of that fear, because there's a lot of good things happening, and it is a great time to sell if it's part of, you know, what's in their wheelhouse. So I know Amber has hopped on here. Amber, I don't know if you can join us, but I know that you have
Hi.
Multitasking.
No, I'm not driving. I am parked.
Good.
But I didn't want to interrupt you because you had
Yeah.
such great information that you were sharing.
Yes, but you know, and I know, thank you so much. But I want to make sure for, you know, what I'm talking about with getting offers accepted, I know that's a conversation you're having, what, like every 4 minutes about how to get your, you know, how to leverage a really solid offer. And I know there's lots of stuff going on. So Amber, if you want to.
Yeah. And I know you were talking a lot about forbearance, and we got some interesting news about a week ago from our underwriting department in regards to Fannie and Freddie clarifying someone getting current on their loan that have been in forbearance. And the way that they had said it before was that if someone had missed payments and then sold their home upon the sale, they would become current and would qualify for new financing. They clarified a week ago that is no longer the case.
3 months still.
Yep. If they didn't make 3 payments before they sold, they are not eligible for financing. That is like huge, because the last thing you want is to have someone sell their house and then find out they literally cannot buy a new one. So before you're talking to someone about listing their house, I would make sure you're asking the questions: have you missed any mortgage payments? Are you on any kind of a forbearance plan? Because we would need to wait to sell your house for 3 months, or you would need to know you're going to need to go into temporary housing. We would need to have a solution in place in regards to that. So that was a really big news.
That is
and then,
such great.
Yeah.
That is such a gold nugget right there.
Yeah.
Because at that first initial conversation, you talked to clients about that. You just saved them from being homeless. I mean,
Mm-hmm.
Amber, thank you. That's huge.
Yeah, it's a bummer. I can't tell you. I mean, since all of this, I probably had 4 or 5 people that we have done that with, that they were in forbearance and then they sold, and we brought them current through the sale. And so this is going to definitely affect some people. So really good thing to have a conversation about.
4 or 5
No.
just in the week since you've gotten that?
No, 4 to 5 since, like, I would say all of the forbearance stuff has happened. Okay. And we've been doing these loans. And so those are people that really would not qualify anymore. And so make sure you're having those proactive communications with your clients, those conversations. They will greatly appreciate it. And then in regards to getting offers accepted, I mean, the strategy that we've been talking to a lot of our clients about, I was actually talking to one of my partners right before this call about it, He has a client putting down 20%. He's in the mid 400 price point, and they are getting beat out offer after offer. And they're going like 20 grand over, but he's like, they don't have a lot more to put down. And they're worried about going in, waiving appraisal contingencies, it not appraising, not having enough money. And so I reiterated, like, using the single premium mortgage insurance strategy where, depending on a client's situation, how much they're putting down, what their credit scores are, what their debt to income ratio is, the cost of the mortgage insurance policy is going to be a little bit different. But for someone that has pristine credit, we could make up a $15,000 gap between a sales price and an appraised value for about $2,000 out of pocket to the client. So they take what would have cost them 15 grand, they turn it into 2,000. That allows them to go in and be a more aggressive buyer to help win that dream home for them without it breaking the bank. And it's kind of a complicated situation. And so if you want more information about how we're utilizing that strategy to help our clients win offers, call me and I'll walk you through it, because I'm sure that it's going to be good to at least help one of your clients win a house that they wouldn't have won otherwise.
And because the details are so specific, definitely make sure you go through that right process, having those conversations with Amber. So,
yes. Yep.
Yes. Because we need all the help we can get.
Yeah, it makes a big difference. I mean, if you're winning offers and your client goes and tells their friends that they won because of you, because you connected them with someone who gave them the strategy, the word will get out. I mean, that is the biggest frustration right now. So if you want to generate more referrals from the clients you already have, getting creative in how you're winning offers is going to help you for sure.
Yes. Yes. I mean, that is, and we've talked about this over the last bunch of years, of course, but it's all about, what sets people apart in this business. Because we know it's hard to get business in real estate. Like, it's hard to earn the clients and the trust. And it's things like that, these little things, little pieces that you can do that shows your creativity, your effort, lets your clients know, your buyers and your sellers know how much effort you're putting into it to get them the winning offer, the top dollar for your sellers, those things that really matters. And in a time when there's more, spotlights shining on real estate. I mean, we've mentioned on and off over the last couple of months of the big, seller paid buyer commission class action lawsuit that is still moving along. And NAR's first motion to dismiss was denied last week. So it's, there's things happening with this that are underlying and they're still moving forward. And so a way to insulate yourself and a way to protect your business is to just do everything you can for your clients. Be their advocate, be their consultant, let them know what they need to do to get in houses or get their houses sold, because that's what's going to help you survive in the long term.
Yep.
Okay, so
totally agree.
Soapbox down.
It was good.
Awesome. Yeah, I mean, there's so much happening, and I feel like with this information all the time, oh, Amber, we lose you. There you are.
There you go. Another call.
It's like all this stuff is happening all at once, and so it's just it's a lot to juggle, and it's crazy out there.
Yep, for sure.
You seeing anything else that's like wild and crazy and happening and shifting quickly? What do you know?
No, I mean, interest rates are staying low. So it's still just like calling your database and making sure that they know what the opportunity looks like right now. I mean, I just still think the biggest opportunity is helping those clients realize what they could buy if they sold their home and rolled the profits that they've made over the last few years into their dream home, coupled with low interest rates, buying a house for maybe a couple $100 more per month than they pay right now, but getting into a house that meets their needs. It's their dream house that fulfills all their check boxes. I just think that that's the message right now, the opportunity that we have that's so incredible.
Definitely.
Yeah.
Awesome. Well, as always, Amber, it's lovely to see you.
Thank you for having me.
Appreciate your time and joining us and pulling over so you're not doing this while you're driving.
Yeah, definitely not.
Well, sounds good, and we will talk again soon.
Thank you. All right. Bye.